Today, it's the final countdown for Ethereum's Shanghai upgrade. A new report from Glassnode dispels fears of a post-Shanghai sell-off, and Anchorage Digital's Diogo Monica explains what the upgrade means for institutions. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto investors are in wait-and-see mode after new inflation data this morning and that Shanghai upgrade for Ethereum later this afternoon. We'll have much more on that in just a moment. But as of noon Eastern, Bitcoin traded just under $30,000. Ether hovered around $1,900. And one cryptocurrency getting a boost this morning is Solana. It jumped to $23 ahead of the launch of Saga, a smartphone developed by Solana's mobile arm and the designer behind the Essential phone. All right, let's talk about the top stories. First up, a Swiss court will let the European arm of FTX explore a sale. According to a release from the company, the approval of the moratorium will let FTX Europe explore a strategic alternative like a sale of its business. Importantly, this moratorium won't stop the firm's process of verifying customer balances ahead of the allowing of withdrawals. And any sale would have to follow rules laid out by U.S. bankruptcy court. FTX Europe is also a debtor in FTX Trading's Chapter 11 proceedings happening in Delaware. Next, Montenegro's central bank is launching a test CBDC using a new partner. Ripple was selected by the central bank to collaborate on a pilot program for a central bank digital currency or national stablecoin. According to the announcement by Ripple, the central bank's governor said the program will analyze the advantages and risks that CBDCs or national stablecoins could pose concerning electronic means of payment, availability, security, efficiency, compliance with regulations, and most importantly, the protection of end users' rights and privacy. One thing to point out though, Montenegro uses the euro, and the European Central Bank is also exploring a digital version of that currency. Just a few weeks ago, the ECB President Christine Lagarde revealed that a digital euro will play a key role in safeguarding European autonomy, rather than relying on credit cards and payment processors that are based elsewhere. Last, everyone's watching to see just how much ETH will be sold after the Shanghai upgrade. As we talked about, that update will allow validators to claim their staked rewards, and a new report from Glassnode expects about 170,000 ETH will be available to be sold after Shanghai. That's about $320 million at today's prices. Some important caveats though, not all of those funds will be readily available. Some will have to wait days to see their ETH become liquid. Glassnode also notes that only a fraction of that will be sold off, around 70,000 ETH, but even in a worst case scenario where all that ETH is sold, the research firm expects that it would only have a moderate effect on Ether's price. All right, let's talk more about that highly anticipated upgrade for our main story. Shanghai, also called Chapella, is set for later this afternoon. So Crypto World's Talia Kaplan spoke with Diogo Monica, the co-founder of Anchorage Digital, to find out what the implications are for institutions.
Ethereum's Shanghai upgrade is expected to unlock more than $30 billion of staked Ether. You're the co-founder and president of Anchorage Digital, a custodian of digital assets for financial institutions like banks and VC firms. So I want to start off by asking, what do you think this upgrade will do for institutional adoption of ETH staking? Do you think this will lead to increased interest from institutions?
Yeah, so there's two upgrades happening. There's Shanghai upgrade alongside Capella. One is for what we call the execution layer of Ethereum. The other one is for the consensus layer. And people have been using a portmanteau of Chapella for the whole combination of both upgrades. One of the main features that is bringing is the fact that so far, once you participated in the new proof of stake consensus mechanism, you had to lock your Ethereum to participate, but you couldn't withdraw it. We will finally, with this upgrade, Shanghai and Capella allow for withdrawals, which will increase the ability of investors to have liquidity over their Ethereum investments. The reason why that's extremely important is because there's been many investors that have stayed on the sidelines because of the lack of ability of withdrawing. In fact, as you mentioned, Anchorage Digital is a bank. We're actually the first and still only OCC chartered bank, and all of our investors are just large institutions. And the majority of the Ethereum at Anchorage is not currently staked. And the reason for that was that people were waiting for this type of upgrade to get liquidity on Ethereum so they could participate. So it is very accurate to say that many of these institutional investors have been waiting on the sidelines for this particular upgrade so they can start contributing to the security of the network to stake their ETH.
I asked some of our prior guests on the show this same question, but I'm wondering what you think will change after users are able to withdraw their staked ETH, which has been locked up since December 2020. Do you think this will lead to a massive sell-off of the asset?
I do not. I think that is the basic instinct to say that there will be more supply that will be unlocked after the upgrade, and thus there will be a massive sell-off. However, I will point for two different facts. Number one, there is already a liquid market for derivative tokens such as staked ETH that allow investors to participate without losing the liquidity of their staking investment. So that is already the case. So it's not like there is this huge demand and drive that people locked in and now have regretted it. Another point that is related to the fact that the price action of Ethereum has actually been very positive. That might lead to some people want to take some off the table, but in general, it's not like this has been a bad performing investment this year. And then finally, we have to think about the fact that, as I mentioned, very large institutions, which are very big, long-time horizon holders, have been on the sidelines because they haven't been comfortable with investing under these staked token models where there's liquidity, and they wanted to be directly on the network. So now that they have that capability, yes, there might be people wanting to unlock it and wanting to actually sell it, but there will be many people that will actually, as demand will be to lock it, to participate in the security of the protocol. And so the same amount of people that want to sell might actually be balanced out by the people that actually want to lock in and participate in the security of the consensus and weren't comfortable doing it before this upgrade.
Sticking with the topic of staking, in February, crypto exchange Kraken settled with the SEC for $30 million and announced that it will close its U.S. staking operation. At the time, SEC Chair Gary Gensler told CNBC that other crypto platforms should take note of the move. What is your take on staking from a regulatory perspective?
The interesting thing about Anchorage is that we are a bank. And in fact, our banking license includes explicitly the staking as one of the business lines that we provide. And so as a bank, we can actually provide these services, and we are regulated by the OCC, and our charter explicitly includes this as a business that we can do. And so the facts on the Kraken case are completely distinct from, in fact, many different staking providers have very distinctive facts from the Kraken facts. And in our case, this is served as a business only to institutional investors, and it has been done under a banking license, which makes it an authorized service that we can provide. So we are always constantly monitoring these types of regulatory updates, and it's very important that everybody is and continues to do so. But we're very comfortable that we are the only unambiguous qualified custodian that these very large institutions can actually use to stake their assets.
Turning to markets, we're seeing Bitcoin and Ether climb higher, with Bitcoin hitting the $30,000 mark for the first time since June this week. What do you think is driving markets right now, especially amid this backdrop of a continued crackdown from regulators and the closures of crypto-friendly banks?
What I've seen from institutional investors has been that this narrative around inflation, long-term inflation, has been one of the driving narratives as to why people are coming back to assets that are considered to be inflation hedges as Bitcoin. So a little bit of a resurgence of that narrative of inflation-resistant asset, sovereign-resistant asset that is inflation-resistant. So that has been a pretty interesting one to note. I don't know how much of that actually drives the price action, because primarily what we see is long-term investors. They buy and hold and are in these networks to participate. They want to actively participate in staking. And in fact, one of the biggest drivers around interest for Ethereum over the past 12 to 18 months has been the successful merge. And now with Shanghai Capella, potentially other types of upgrades that get us further to the path of the holy grail of Ethereum, which is enabling sharding. The ability of having not dozens of transactions per second, but thousands of transactions per second, obviating the need for some of these layer ones like Solana that have come explicitly because they had faster transactions as a competition for smart contract world computer. And so that has actually been the major driver narrative that we've seen for institutions to come back to Ethereum, has been the belief that the ecosystem is actually moving faster, shipping updates, shipping upgrades, and not remaining static.
All right, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.